The unemployment rate is starting to rise. Inflation is falling. What are you waiting for, the Bank of Canada? You should be cutting now.
Right, Robert, we've talked about so many things on Real Estate Chat.
Of course, the good stuff.
And of course, our Real Estate Chat viewers who have liked, subscribed, and joined in on the conversation are engaging in these conversations. And one of the things that we said was, wouldn't it be great if we had Benjamin Tal in one of our videos?
Yeah, can you arrange that?
Well, we can't arrange it per se directly, but in an event held by our brokerage Remax Hallmark Connect 2024, one of the speakers who had spoken with our Chief Operating Officer, Steve Tabrizi, was Benjamin Tal. And they had a nice conversation about the economy.
We are in a per capita recession. Per capita GDP is down by 3%. Per capita, per person, consumption is down by 2%. So the only reason why the economy is still above water, barely, is because of the fact that we got 1.2 million people into this country last year. I tell you that this is not a way to grow an economy.
And so on this episode of Real Estate Chat with
Johnder Perez.
and Robert Eid and Benjamin Tal and Steve Tabrizi on the video, we're going to be talking about a lot of things that our Real Estate Chat viewers have already heard Robert and I talking about, except now Mr. Benjamin Tal is going to be talking about it. And Robert, let's start off with this.
Let's discuss inflation. When you read in the newspaper, inflation, what is it? What is inflation? So first of all, let's remind ourselves that inflation is the rate of change. We all go to the supermarket. We are overwhelmed by how expensive food is, yeah? Yes. Crazy. The Bank of Canada does not care. Not because of the fact that they're not nice guys, they are. But because of the fact, listen to this, communicate. Inflation is the rate of change, it's not the level of prices. So if food prices went up by 10% last year, and today they're rising by 5%, still rising by 5%, that's disinflationary. It's not the level. The level does not enter the calculations, it's the rate of change, and they don't care how high the prices are. That's one thing. So this is something that the Bank of Canada is taking into account. Now, when we say inflation, we mean CPI, yeah, the Consumer Price Index. The target is 2%. Now, we can discuss, and that's another thing to discuss with clients, we can discuss until we are blue in the face. To what extent 2% is the right number? I believe it's not. We'll discuss later why. Never mind, they are not going to change it. You need like 500 PhD dissertations to change their mind. So we are stuck with 2% inflation. The CPI is the target, but of course CPI is very, very sensitive to food prices and energy prices that are jumping. So the Bank of Canada is looking at something called core CPI. CPI minus energy and food because it's less volatile. Fine. So we have two measures to look at. And then a few years ago, they came up with another measure. It's called CPI-X, which is CPI minus other 8 components. And then 2 or 3 years ago, they came up with other one, CPI median, CPI trend, CPI component. They have 6 CPIs measured. Okay, listen to this. It's very important. Why? How do we measure the CPI? They say year over year. And then they say, you know what, year over year is too sensitive. Why don't we do 3 months moving average year over year? And then they say, who cares what happened a year ago? Let's do month over month. Let's do 3 months moving average, 6 months moving average. All of a sudden, you have 6 by 6 metrics. 36 inflation numbers when they release the numbers. 36 numbers, that's an inflationary buffet. Why is it important? When the Bank of Canada wants to be hawkish and say, we are going to raise interest rates, they can look at those 36 numbers and they can choose high numbers because there is enough there for everybody. If they want to be bearish and say, we are cutting interest rates, they are looking at low numbers. So it depends how they wake up in the morning. What I'm telling you here, and that's the message, the narrative is determining the data and not the other way around. It's not the data that is determining the narrative, it's the narrative that is determining the data. Today we got better than expected numbers, The Bank of Canada is now in the corner. They have to recognize that inflation is falling faster than expected and that they are overshooting. But they always can find numbers that are 2 or 3s in these 36 numbers, in this buffet, to justify no move.
The narrative is driving the data. So Benjamin, Mr. Tall, said something very interesting about how everything is packaged so interestingly. And I know a lot of our real estate chatters who are, you know what, let's keep the interest rates the way they are. In fact, they're probably going to increase. They're not going to be dropping anytime soon. Benjamin straight up said,
we are in a per capita recession.
Bank of Canada has to act now. They're a bit too late to cut rates. In fact, rates should not have increased the way it has. But when he says that the narrative is the one driving the data, Robert, what does that mean?
Okay, well, Benjamin Tull was the one who introduced me to the term overshoot. And he described that as an built-in inherent characteristic of the Bank of Canada. Too late, too long, too late, too long. And that's how they operate. They wait till they're not anticipating, they're following. So the narrative has been established that they're not going to drop interest rates until it's proven by the data. But he went to great lengths to explain how there's now 36, 6 times 6 iterations of CPI, including this, minus that, subtracted for that, seasonally adjusted, blended over 3 months, blended over 12 months, so that he's got enough to pick from these 36 so that what his predetermined narrative, what he's decided is going to be, or what his bosses have decided the story is going to be, is driving things, not the data, even though they say from the top of their lungs with a very proud voice, it's data-driven. How can it be data-driven when they're looking at stuff that's 3 months ago? It's not. It's narrative-driven.
Well, isn't it interesting that, Mr. Tall calls it, what is it, an inflationary, it's a buffet of different data points that they can choose from. And so with that, we go into a bit of a lesson of what inflation is. And Benjamin said that, of course, inflation is a rate of change. So everybody watching this who thinks that, for example, if it's 5% one year, 3% the other year, well, we must be, okay. Cumulatively, it's a big number, but it's a rate of change year after year. It's a percentage change year after year. And so what importance, Robert, does inflation have? And he mentions a key thing that we've talked about already. And it's interesting to hear from somebody else. What was very interesting about inflation as an indicator and why it's sort of like we're going around in circles because an increase in one caused an increase in the other, and that increase in the other is causing a further increase in the other thing. What was that all about?
Mortgage interest payments. The Bank of Canada is calculating shelter inflation, housing inflation, which is one third of the CPI. Shelter inflation. What is shelter inflation? It's not the price of houses, not there. It's commissions to real estate agents. That's part of the inflation, a small part of it. Rent makes sense. And then listen to this, mortgage interest payments that are now rising by 30% a year. Now think about it for a second. That's important. The Bank of Canada is raising interest rates, and discuss it with your clients. The Bank of Canada is raising interest rates. Higher interest rates are adding to mortgage interest payments and therefore adding to inflation. You see how crazy it is? By the very fact of raising interest rates, you are raising inflation, although you are trying to basically fight inflation. Listen to this. If you remove, and by the way, Canada is the only country in the universe that is using mortgage interest payments in their CPI calculations. All the rest, it's not there. What happens if you remove mortgage interest payments from the calculations? After today's number, CPI inflation is 1%. It's undershooting the target. Enough is enough. You are overshooting with interest rates. I believe they should start cutting now, although they will not. Inflation is definitely under control.
He said that according to any one of the ones you picked, that shelter, which includes rent, interest costs for homeowners, is about 1/3 of the total inflation that they report. Now, inflation is a measure of how much less the same dollar can buy than from the beginning of the period that they're discussing. Now, does inflation change exactly on a 12-month cycle? No. They look at it a year before, they look at it 10 years before. So his first comment was that we're in a per capita recession, meaning, and they don't. The federal liberals, when they put their budget out, they talk about the growth in GDP. Now, GDP is everything added up together. I've said this before. But when you divide it by the population, you see that actually it's shrinking. So it's smoke and mirrors times 57. This government has been in power too long. The agenda that they're pushing is not helping anything. And yes, the high interest cycle, which is global, worldwide, is hurting almost every component of Canada. Shelter and the where they're including in shelter, the interest component is now one of the biggest drivers. Gas edging down a bit, food not up as much as it was, of the whole inflation, the grand total that they're trying to use as a comparator, not the divided into bits. So we are still 15% higher than we were at the end of 2020. And it's getting to continue. The trouble is people are anticipating what the Bank of Canada is going to do and then what the variable rates and what the 5-year rates are going to do in the balance of this year. That's what's affecting the real estate market, which has gone bananas again. People, the difference between last year and this year, which we didn't see, was that people are now saying, okay, I'll make do for 2 years, but I got to buy something. I got to get in. It's the same fear of missing out that was all through the crazy boom. And so that's more than an answer to your question.
And that's despite the fact that there is no rate cut yet. So, I mean, to reiterate that, basically, with the increase in rates by the Bank of Canada, mortgage interest has gone up. So the cost of that has gone up, has fed into inflation. And because of inflation going up, how do you cool down? How do you cool down inflation? You raise rates again. And so that's a perpetuating cycle. And so he makes a comment as well, where we are in a buyer's market with no buyers. And Benjamin's pretty witty with some of the commentary that he states there. Robert, give us a little bit of commentary into that, because it is a spring market right now. I mean, you can't tell if you're watching this when we're recording it. It's snowing outside. Typically, that's what happens in the spring. It starts to snow. But we're in a market where sales are supposed to go up. Average prices are supposed to rise. Robert's going to be giving us an update in a couple of days before the Toronto Regional Real Estate Board does. But how come we're in a buyer's market with no buyers?
Well, Mr. Tall is the greatest showman of all the economists. Every one of others is a very dry bones explainer, and this guy's fun to listen to. It's not really a buyer's market with no buyers because there are buyers. The whole market is depressed. We're only at 30% of our regular sales level. The number of listings is way down. So as we've tried to say a few times, it's a diminished market, but very intense. If you're participating, it's very intense. There's many properties that are still held off the market. Grandma and grandpa aren't selling quite yet. Investors aren't buying or selling. First-time buyers are waiting for a better opportunity. They think prices are going to crash. So, but it's a good line.
It's a great line. And I mean, the greatest line that he said is that the Bank of Canada should cut interest rates now. In fact, they shouldn't have raised it. They should be cutting it. And so with our previous mention of when Mr. Tal last spoke at one of our real estate industry conferences or events, that the estimate or the projection rather is by May, June, there would be the first cut coming. Robert, you and I have talked about this in our previous episodes. But just to set the record straight, right now we're in a spring market. Rates are pretty much steady. They haven't gone up. Do we still see that happening? Do we still see that rate cuts will happen? And considering what Benjamin said, and we're going to link to this full video, by the way, you'll watch it on the Remax Hallmark YouTube channel. But to reiterate one of the things that he has said continuously about the upcoming rate cuts, and he's calling for rate cuts very passionately. Why, Robert? Why will we see those cuts happen soon?
Okay. The conventional wisdom about the Bank of Canada is that they will cut 3 times in 2024. Now, that's a quarter each time. So maybe it's June, maybe it's April, maybe it's July. Who cares? It's a quarter. And then a couple more times in the fall. The thing that's happening now is the lenders are being squeezed. We won't get to a discussion of where does the money come from that the lenders use to actually fund these mortgages. But the lenders are now reducing. We've now got 5-year money very close to 5%, the bank rate. They are pricing it much more competitively. The variable rates are still a little bit higher, but people know if I take the variable, as rates come down, my monthly payments are going to come down, or my mix of principal and interest is going to be more favorable to me. So people are understanding what they've seen over the last 2 years and saying, okay, can I handle the payment? What can I do to make the payment less? And if they can't do anything about it, they're just deciding, well, maybe I will do nothing, or I'll take a variation on conventional financing that will help me get over, as I said earlier, the 2-year hump that we're going to have to go through for interest rates. Mr. Tall said, I don't know when they'll see this segment, that the Bank of Canada does not seem to care that the prices are high. Prices for gas, prices for food, prices for everything that you do, and prices for real estate are high. Affordability means the price at the rate based on the income that you're earning is out of whack, but nobody wants to see the prices come down. Nobody knows a way to move the incomes up magically. All that the Bank of Canada ever can do, apart from talking about what they're going to do, is fiddle around with interest rates. So the acknowledged fact is that we're never going back to 1% for a variable rate, 2% for a 5-year. No, we're not ever going back there. He said it. We're going to get somewhere around 3. Maybe it's more than that, 3.5, 4. But that's much better as an interest rate than where we were up in the 6s. So,
well, it's like you said in our previous episode, I remember it, right? What we're looking at right now looks better when you're comparing it to 10, 15% plus interest rates. And so why not? And looking at when, Robert, you say something like 3%, I mean, that seems like exciting because even though we've seen that in the past, we probably took it for granted. But knowing now that we're in the 5-6% mark, 3%, I'll take that anytime. Now, one of the things that he also talked about was a bit of a sensitive issue, and we've talked about it on Real Estate Chat when we talked about stopping immigration. And the message behind that, of course, is we're not against immigration or against immigrants. It's a fact that if we are in a country that is bringing as many immigrants in volume as it is, there should be infrastructure in place, and we should be treating those immigrants in a way that allows them to facilitate a livelihood here in Canada that's setting them up to succeed and not to fail. And so Mr. Tall talked about Mickey Mouse schools in his words, and we'll play the clip here as well.
Yes, that's an extremely important question. So we have to distinguish between two things. When we say immigration, what do we have in mind? There are two types of immigrants. One is permanent residents, namely immigrants, and the quota is 550,000. And that's fine. We can discuss whether or not we should change the point system for those 550, which I think we should. For example, one of the reasons why we have shortage of housing is labor. We don't have trades. Good luck trying to find a plumber, yeah? We don't have trades, we don't have construction workers. 300,000 people are going to retire over the next decade. What's coming? Nothing. If you look at the number of new immigrants in construction, 2%. 2% of new immigrants are in construction. I say change the point system to make it 10%. So the immigrants, instead of being the problem, make them the solution. So that's the 550. I have no issue with that in terms of the number, but the point system should be changed. Makes sense. The rest is non-permanent residents, foreign workers, and more so, international students. And we are undercounting the number. The official number is that we have 1.5 international students in this country. The real number is close to 2.5. We are undercounting 1 million. They are there, they are consuming real estate, but we are not counting them for many reasons. And I say, those foreign students, 20% of them are in food banks. They cannot find units, they cannot find housing. And I say, if you don't have a quota, and we don't have a quota, the University of Toronto can decide tomorrow that all those students, all of them, are foreign students, paying $40,000 a year as opposed to $7,000 a year. So that, for universities, that has been a gold mine. But If you cannot house them, don't accept them. And I'm not talking about big universities. I'm not even talking about students. 25% of those so-called students, they are not really students. They are coming here to buy citizenship on the cheap. And there are many what I call Mickey Mouse colleges that are not really colleges. The Northern Ontario Advanced Mathematics Academy, something like that. Doesn't exist. It's a strip mall with one room, and that's the college. $40,000. This is disservice for the country and for the new immigrants. So I was very vocal about if you cannot house them, don't bring them, because they're putting a lot of pressure on the rental market, too much pressure. And also, make sure that they are legitimate. You are taking money from very poor people because they're trying to get into Canada. You're taking advantage of the situation if you are this college. So make sure that it's not there anymore in terms of the number of colleges, and put a quota on the number of new immigrants, foreign students, and that's exactly what the government is doing now. We need to do more. So we have to distinguish between new immigrants, permanent residents, and foreign students. That is a totally different story. And if you put a quota on that, you remove the demand for the rental market.
However, these organizations come into existence are doing a disfavor to immigrants looking to come to Canada and secure a fantastic life and secure, residency here, and to most importantly, be a contributing, useful part of society. He talks about the different labor shortages that we face and why real estate, of course, will end up costing the way it is over the next decades or so because of these policies. Robert, why don't you chime in on Benjamin's take on immigration policy, how, of course, it's affecting real estate, and why we told everybody we should stop immigration unless, Canada does something with this program to address these issues.
Well, we've learned as well that immigration is not one thing, it's about 10, but let's talk about 3. You've got the regular influx of people who are approved to become permanent residents. Then you've got other people that are here on a student visa, and you've got other people here who are on a work assist system. Never mind refugees, there's too few of them. There's sometimes a lot of them, but that's not what we're talking about. That there are phony schools, that's what he said. We've gone away from the point system where we were looking for certain characteristics in newcomers. And so if you had these characteristics, you got priority. If we think that they're favoring a certain nationality or a certain ethnicity or a certain religiosity, that's no word, religion, then we'd be upset, but they're not doing that. We're saying we need construction workers. Why aren't we favoring construction workers? There's about 10 points that need to be made, but the government has responded saying that today, no, in the fall. Okay, in the fall. Because it takes forever to do something. How do you turn an ocean liner? Very slowly. We've seen abuses in the immigration system. It's a game, which Mr. Tall said. They are buying citizenships by getting you to come here and you start to work here, and now you apply from within and you get a pathway to dual citizenship. So you get to play both sides against the middle. You get all the yummies of Canadian citizenship, and you get all the yummies of your homeland and where your mother and dad still are. So it's a conversation that's coming to the line, to the forefront, and to the conversation, which is good. This whole process of interest rates and how the Bank of Canada operates and what our Tiffany is actually up to and whether he's up to anything at all. He can't even call the governing council the governing council. He's got to call it governing council as if it's some special thing. Anyway.
Very interesting. Very interesting. A lot was discussed, and special thank you to Remax Hallmark, of course, for putting on the event, and credit to them as well for the video. You can watch the full video. Again, we've linked it so that you can watch the full commentary and full discussion between our very own Steve Tabrizi as well as Mr. Benjamin Tall of CIBC. Robert, any final takeaways, any final things you want to share? I know we're constantly pushing the interest rate cuts, and I know a lot of you watching this who may be just watching this for the first time, maybe, or some of you who've been here for a while and saying, of course, 2 real estate brokers want interest rate cuts. Of course, rate cuts would benefit the real estate industry. Please watch our videos because you'll see the balance of our presentation. Some of you might call it arguments. We call it, our discussion, and you'll sort of see the whole equation, if you will. But Robert, any final takeaways from this video before everybody watches the Benjamin Tall interview?
Well, I think Tal will, if you've never seen him before, you'll be quite caught up by how he approaches it. He doesn't pull punches, and let's see how you cut it together into a comprehensive, cohesive unit.
No, you'll see the full one. We gave snippets on this video. If you're watching this, watch the full one and you'll get the full context of it. As always, thank you, Real Estate Chat viewers, Real Estate Chat chatters, for watching. If you're new to this channel, make sure you click on subscribe. If you like this discussion, click like. And more importantly, leave into the comments what you think. And we'd love to hear your discussion. Yeah, no matter what your perspective is, we love to have a well-rounded discussion from everybody here. Thanks for watching this episode of Real Estate Chat. Take care and bye for now.
See you.